Hello everyone, welcome back to Mindful Finance. It's your host Sundar here. If you are looking to enhance your trading skills and make informed decisions in the market, you are at the right place. Today, we are diving into a fascinating tool in the world of trading, the SuperTrend indicator. Whether you are a beginner or an experienced trader, understanding this tool can really change the game for you. The SuperTrend indicator is not just popular among traders for its simplicity but also for the effective signals it provides in different market conditions. But what exactly is this indicator? How does it work? And how can you use it to spot potential buy and sell opportunities? Well, that's exactly what we are going to explore. This tool uses something called the average true range or ATR, which helps measure market volatility. By combining this with a chosen multiplier, the super trend indicator helps us identify whether we should be thinking about buying or selling based on the color changes directly on our charts. Green typically means buy and red means stop. Simple as that. So green typically means buy and red means stop. Simple as that, right? But that's a bit more to it, and we'll get into these details in just a moment. In today's video, not only will I show you how to set up the super trend indicator on your charts, but I'll also share some tips on adjusting its settings to suit your trading style and the assets you are trading. Plus, we'll discuss how to interpret its signal to enhance your trading decision. So make sure you stay tuned, grab your notepad, and let's get ready to make your trading experience a bit more mindful and informed. If you find this video helpful, don't forget to like, subscribe, and click that bell icon so you never miss out on valuable insights. Now let's get started. And this is Sundar and you are watching Mindful Finance. So welcome back. So one more important thing, as even though this indicator is mostly used by the traders, I prescribe to use this for long-term investors as well. Or if you want to do a swing trade like buy and sell after a month or sometime, for them also it will be very helpful. But overall, it will be indicator for anybody is getting panicked, right? If there is a very volatile movement and you are getting panic whether this is the time I should exit out of my position or not. So all those kind of things I will explain in this video. So let's get into that. Come on. So there are different tools are available for chart. One is trading view, and right now which I'm going to show is like mostly I feel like everybody is using the kite app nowadays. So I'm going to demonstrate in the kite app itself so that you can easily use this one. So anybody can use this indicator if you are a long-term trader, long-term investor, or a swing trader, or intraday trader, or just a momentum trader. Everybody can use this indicator. The way the setup I'm going to show is very easy and anybody can apply, and it's very effective. And I have seen 90% success rate. Obviously, trading platform will not give you 100% guarantee. So I'm saying 90%. So I have tested, I have done a back test on this. So almost 9 out of 10 trades are successful. So let me show you how to do that. If you are using the kite app, so you can pick any of your chart from this one. You can add the things in your watch list, and hover over it, you will get this kind of a chart icon. You click it, it may open in the right side first. After that, click on this particular area, so where it will open as a new window. So this is what it is. So Nifty has opened in the new window. So let me start with the Nifty chart, and then we'll get into the other stocks if needed. Okay. So right now it is the plain vanilla chart right now. It is in a daily view. So you see D, right? This is a daily view, a daily candle pattern. And one more thing is, it will be very good if you know the chart patterns and the candle patterns, all those things, the price actions basically. If you know that, it will be well and good. If you don't know also, it's okay. You can do this. So let me show you the first how to add. Click on this indicators and search for super trend. You can see trending green and red kind of a line is added here. You can see the super trend indicator got added. So it's this is a straightforward one. So whatever the settings you have is a default setting here. You can change the setting here. You see a setting icon over here. If you click, you can change the setting. So the factor is ATR. Basically ATR ranges from 1 to 7. More if you want to be a moderate risk taker or average risk taker, people will tend to use this factor as more than 3, like 7 or something. Okay. But if you are doing a very fast, quick big trade, you can reduce this multiplier to 1 or 2. That means you can take more trades, more very less number, you can take more trades because you'll get more signals. But that is also danger because you may get up wrong signals also multiple times. So, but I'll show straightforward which the super trend indicator, and I'll explain you. So this is the default setting. 10 is the length, which is a normally average moving, and 3 is a ATR. It's a multiplier. So if you get into this, if you see, so this is a very straightforward one, which means whenever you see a green line, okay, when it is above the green, you enter the trade. Whenever it crosses and the red line starts, okay, if you see, so it is crossing this the trend line, okay, the super trend line, and it is going above, and the trend line has changed to green. Whenever it changes to green, you enter, and whenever it crosses the line downwards and crosses the red and it becomes red, then you sell, okay, short. That is shorting, right? You can exit the trade or you can short the trade, right? You can short the trade and you can enter the trade again. Means sell here and buy here, right? Again, I'll get in the detail, but yeah, so this is the way the indicator is about, right? So if you see this, if you go with this particular approach, you might sometimes end up with, see, this is the indicator showing you to short. If you short this one, see this, it is going above, it's going up, and it may hit your stop loss and you have to exit the trade. So here also, if you see, here you will enter, but again it is sideways. It is not a correct signal for it. You'll end up in multiple this kind of scenarios where your trade may hit a stop loss, or you may end up in multiple trades which are not proper trade. Okay. So for this, I'll guide you what to do. Okay. This is how the basic one. So you have to add the super trend 3 times. Okay. Let's add again one more super trend and change this setting. See, the first default setting is 10 3. So I will change this to 10 and the factor is 1. So just reminder, 10 means like one number, so I'm adding 1. Okay. And the another thing which is I'm going to add 11 instead of 3, it will be 11 and it's 3, the default one. Okay, and the third one again I'm going to add one more super trend. So there I'm going to make this as a 12 and this is 2. Okay, sorry, this is supposed to be 3. 12 means 3, the opposite number. 11 means 2, just for your memory. Okay, so if you add this 3 indicators, okay, now the point is you are not relying on one indicator, you are relying on 3 indicators. Okay, so whenever it crosses all 3 above the one, it becomes green, all green or below, then you enter. So this is the entry point now. So you are not entering here or here, you are entering here, right? And it goes. Similarly for selling also, you have to see all red, all 3 has to be red. You see, so you have to sort it. You have to short here. Okay, and if you know the price actions and the patterns, so if you want to short this one, you will enter here. Okay, basically you will enter here. This is your stop loss. So if I go with 1:1.5 ratio, yeah, target is achieved here. This is your 1:1.5 ratio. So go with 1.5 is a good, well enough. Still, if you want to do, you can go with the 1:2 ratio. See, I'm looking at here. If you see risk reward ratio 1.99, right? So this is the risk reward ratio, which is your stop loss is 1. For example, I'm entering a trade at say 10 rupees. Okay, this 1 rupee will be my stop loss. Okay, but I'm expecting I'm losing 1 rupee, but I'm going to gain 2%, which is 2 rupees, 1:2 ratio. So my risk is 1 rupee, my reward is 2 rupees. So always your risk reward ratio has to be like this. Okay, people still go with a certain assumption that instead of that I'll set the 1:2 ratio, but I'll move my stop loss to the middle of this candle or little bit lower to the previous one, so that now the risk reward ratio is 4. My stop loss has reduced, but normally you have to put your stop loss below that particular candle if you are shorting. If you are going long, so here same way, if I'm going long, right, so I'll be entering here. Okay, stop loss is below this candle, right? My risk reward ratio is 1:2. Yeah, so if you see, yeah, my target is achieved here. You got it. In the initial scenario, we wouldn't have got this kind of output in the normal scenario. So we are using 3 indicators to get a proper entry and exit. And if you know the proper chart patterns and the candle patterns, you will understand how to understand the exit also. Okay, you don't need to put this pattern, but if you feel that this second green line, right, not the first one, the second one, whenever it crosses the second one, that can be your stop loss. That way also you can set. So you entered here, so you just entered here. Okay, my stop loss is going to be like this. Okay, you can still go on with your trade. Okay, you can still keep going in your trade. And whenever it makes one line, like one indicator it went, right, you can, what you can do is you can switch your entry again to this level and move your stop loss here. But you entered here actually, right? You entered here. I'm changing my stop loss, my target again. So this is my stop loss now. So from there I will set a target which is 1:2. So this target also achieved here, right? You can exit. Sorry, here your entry is here, right? So this is target is still open. See, close. Okay, sorry, this is closed, right? But still it didn't cross the second green line. You see, it didn't cross the second green line. Where it is crossing the second green line, here also didn't cross. So here, okay, sorry, here it is crossing the second line. This is the first line and this is the second line it is crossing. So you would have entered here, just see, you entered here and this was your stop loss, okay, and you are exiting your trade where? Here. You are exiting your trade here. So this is almost 1:11 ratio, right? So this is a daily candle, okay, this is my daily candle. Similarly, let's see the shorting position, okay. Now this, here it crossed the shorting position. Let's see, this is where it went, it crossed, but it didn't cross the 3 candle. Here it crossed the 3rd candle here, right? So if I entered here, short position, if I entered here, if I shorted here, this is my stop loss, or the second will be my stop loss, right? It has hit the, it hit the stop loss here only, very close, right? So as I mentioned, there is a chance in the 10% chance that overall, right, overall 10% our trade may go wrong, but at least this is fine, okay, this is okay. Now let's see another trade. Here you're going to short here and your target is 1.5. See, exactly, actually it touched here, but still it went down to your, it crossed your second line also, right? So you would have exited here. You may not continue this trade because you would have exited the second line when it crossed, okay. That's a good, okay, so that at least like I'm exiting in a proper way without waiting for anything. But you continued, waited till the stop loss, it recovered again, okay, you would have got the profit. But anyway, so as a traders, you need to be very conscious about your risk reward ratio and your overall risk capacity, right? You should not lose your capital first. Okay, now let's see this one, this particular one. Okay, this is my entry. I'm shorting here 1:1.5. Yeah, this is also failed. Two times we failed in shorting. But if you see, if you would have recovered this second line, okay, which is the place you entered, there you would have exited, right? So two scenarios. One is you wait till the stop loss. One is if it crosses the second line, you exit. Okay. So that is a one, and very like fast traders, right? So like they want to take more trades. They will look for the first line itself. They will exit the first line. Whichever line it crosses, immediately they will exit the trade. So that they won't wait. Just they will just exit here. They won't wait till there. Even similar, this part, if they would have entered here, okay, this is my stop loss, but when it crossed, where it is crossing this first line, so when it is crossing this first line here, this line, right, they would have exited here, but this is the ratio, right? So it is a profit. This one is a profit trade. Yeah, I'll show one more for you. Okay, let's take this one. This is a long trade. Okay, you entered here. Your stop loss is this one. Risk reward is 1:1.5. Oh, sorry. I have to use the long position. Sorry. This is my stop loss. 1:1.5. Yeah, it's here. So this is a successful trade. But as I mentioned, whether it has touched the second line. See, if you exited the first line, you would have exited where you entered. But you waited for the second line. It is not yet crossed the second line. Here it is crossing the second line. So this is where you should have exited. Right. So this much length. Let's check this shorting. I'm showing you different examples so that it will be easy for you. So it has crossed. This is a gap down. You entered here. So this is where you are shorting. Okay. And this is your stop loss. It has hit immediately. Here only it has hit the stop loss. You're gone. Okay. So let's see this one. Long position. You entered here. Okay. This is a successful trade. Okay. So likewise you can find. But if you are intraday trader, don't go with the 1 day chart. You go with 15 minutes or 1 hour. Let's go with 15 minutes chart. Okay. So let's look at 15 minutes chart here. Okay. Is there any trade? Okay. Look at this one. Long position. So it has crossed there, right? You are entering here. This is my stop loss. 1:1.5. This is your signal. You can exit here. And it didn't cross the second line. Now here it crossed. Here you would have exited. Okay, you would have exited here, somewhere here. That means 2.5. 1:2.5 is your profit ratio. Okay, but if you know the chart patterns and other things, you will know using other indicators also you can find out. But this is a straightforward indicator. Don't confuse. So this is the one. Okay, and on the top, what we can do is another indicator, which is EMA. So moving average exponential, if you add this indicator, okay, you make it this as a 200-day moving average. So this is for a very long position taking people. Okay, if you are a long position taker, always whenever it crosses the 200 moving average with all three line crossing, then you enter and you can stay for a very long time. Okay, you see, still it is going. You would have this is the entry for you. Okay, this is your entry. This is your stop loss. You will be still holding your position. Okay, already it has touched your 6 reward ratio. Okay. This is in a 15-minute candle. Okay. Similarly, when it crosses the 200-day moving average, okay, short position. So it crossed here, all three. Okay, you will be entering here, and this is your short stop loss. See here, it didn't cross the line here, but it is like this is a 1.2 ratio here. Okay, so you would have entered here, means exited here, but still, if you still continued, you would have exited at this point of time when it crosses the second line. This is 1.29 ratio, right? Yeah. But you are in a profit. Okay, this trade is a profit trade. And similarly here, if you enter long position here, all three crossed here, multiple time it crosses the second line. Okay, but this is a 15-minute. If I go for 2 hours candle, okay, so for a long term, at least for swing traders, you can go for a 2 hours trade. Okay, there you can enter and exit. See here, if you have entered here in this position, this is your short, this is your stop loss. Okay, so your risk reward is 1:2, but still beyond you can go where it is touching here, right? So this is 1:3 ratio. So you would have exited here. So likewise, you can use this one. The another one I am going to tell you is, let's have only one SuperTrend. There's a indicator called Ichimoku. You go and type Ichimoku. Okay, Ichimoku cloud. Okay, if you add this one, you will get this indicator. Okay, let me hide all the SuperTrend. So this is what Ichimoku cloud is, but it's too much complicated for you to look at first. So go here and uncheck all this thing. Okay, let's have only the plot background. Uncheck all. So you will see only the clouds. This cloud. Okay, the green and blue. Okay. Now let's enable your one of the SuperTrend here, which the setting here is the default setting, which is 10:1. Okay, use this as your reference now. Whenever it crosses that SuperTrend line and it is above the cloud, then you enter. Okay, so for example, so this is green. Okay, this is green. Now it turned green, and see the Ichimoku cloud is above this one. So now you should not enter. Okay, you should not enter because cloud is above the, it depends upon the position. Okay, if you are short position, then the cloud has to be like this. Cloud has to be above, so then you can short it. But the cloud is above, but your SuperTrend is showing like green. But so you should not enter it at this position. So basically you have to enter when the cloud is below and the cloud has to be green. Okay, so check that kind of a thing. It doesn't need to be it doesn't need to be green. You can enter when the cloud is below. So here you can go for a long. Okay, this is your entry, this is your stop loss. Okay, 1:2. You can trade here. So this is a good position. Okay, so this is a good sign now. Similarly, when the cloud is above and the color is red, so this is your short position. You can enter, you can short your you can short here. Okay, and that is your stop loss. So if I say 1:1.5, it didn't happen. So this is a failure trade. Okay, let's check this one. This is not red. Sorry, this is a green, right? So this is a long position. You can go for a long here when it crosses. So this is your we checked what. Okay, this is your long position. 1:1.5. Yeah, this is your successful trade. Let's look at shorting. Okay, this one. Let's look at this short position here. This is your entry. This is your stop loss. Yeah, this is also failure. This is also didn't work. But if we enable all the SuperTrend now, okay, now you see all the combination Ichimoku and SuperTrend. All three has to be green to enter, and the cloud has to be below. Then you enter for the green. So look at this one. Okay, so here all green, it is above the cloud. So you enter at this. So I think this is a gap up, or it came till here. See, came till here. You could have entered here at any point of time. Okay, still see, this is where you entered. Okay, next candle you entered, and this is your stop loss. Yeah, it's already a successful trade. Okay, these are, you cannot short here. This cloud is above, so you cannot short here. Also you cannot short. So let's go for a 15 minutes trade to find out anything, how many signals you are getting in the 15 minutes. So shorting, you have a good signal here. You would have shorted here. Okay, this is your stop loss. Yeah, 1:1.5. It is there. Yeah, you can do this one, right? So likewise, you can use this SuperTrend, Ichimoku Cloud, and 200 days moving average. All this combination, if you do, you can do a very good investments. And if I a long term trader, go for a daily view. If all conditions satisfies, you have to enter perfectly at that point of time with a good amount of investment. See this one, 200 moving average, and all are green, right? You can go long here, and at this point you can go long, and this is your stop loss. Just see your investment grows like this. You just stay invested, buy a future or nifty bees, just continue with this one, right? So whenever you get the indicator to buy, go and add more to that one. So let's add some stock here. Which stock we can add? So let's say Reliance. Reliance Industries. Let's check Reliance Industries. Okay, this is a daily candle, so you could have entered here, long position. So you could have entered here, and your stop loss is this one. Okay, you entered here in the next day. This is your stop loss. Even if I say 1:1.5, I'm already in 2 days. I gained that one. I got the profit. Okay, it is done. But if I stay put till it crosses the second line, which is it is crossing here. So this is almost 1:6 ratio, right? Your risk reward is 1:6. And if you see the price range, okay, from here to here, which is 9%. So this is 9% return for you. But if you are, see, it didn't cross the Ichimoku Cloud here. Okay, if you still invested, kept here, it crossed, see here, the cloud is still below. But there is no shorting option. Okay, all here. Okay, here, yeah, yes. So this is 15%. This is your 15% return. If you would have exited here, even you exited here, this one, yeah. If you would have exited here, this is 16%. From here, if you exited here, 16% return. Yeah, hope you understood the concept of using SuperTrend and Ichimoku Cloud. I don't think anybody would have told you this kind of a concept. Hope it will be helpful for you, and use it mindfully and stay invested. Thank you.